Charlie Munger is a shrewd businessman and one of the most successful investors in the world, so much so that he's even managed to influence the legendary Warren Buffett. Instead of buying cheap, average businesses, Buffett now buys good quality businesses at fair prices, a strategy that had already worked pretty well for Charlie Munger for many years. Thanks to his way of investing, Munger has accumulated a net worth of an estimated $1.9 billion, and in today's video, we're going to take a closer look at his investment portfolio. Before we really get into it, we need to clarify that Charlie Munger actually manages two different portfolios. First, there's the Munger family portfolio, and secondly, there's his investment portfolio. What may surprise many of you is that both of them are very short portfolios, which is easily explained by the fact that Charlie Munger is not a fan of diversification. So both his family and his personal portfolio are made up by only a few positions. When an interviewer once asked him about the lack of diversity in his portfolio, Munger said, "Am I comfortable with a non-diversified portfolio? Of course I'm comfortable. If you take the Mungers, I care about the Mungers. The Munger family only owns a few stocks. The rest is dribs and drabs. So I'm comfortable with a few stocks. Am I securely rich? You're damn right I am." So to understand why he feels so comfortable with having the Munger family's money invested in only 3 key stocks, while the rest are just drips and drabs, we'll start by taking a closer look at those 3 positions before moving on to the investment portfolio he manages at the Daily Journal. The first stock in the Munger family portfolio is Costco, and it makes up a very big percentage, though we can't be sure exactly how much, as they don't have to disclose that information. However, we do know that they own 180,000 shares in Costco, and it is also well known that Charlie Munger absolutely loves this stock and has even called Costco his favorite company outside of Berkshire Hathaway. He said himself, "It's one of the most admirable capitalistic institutions in the world, and its CEO, Jim Senegal, is one of the most admirable retailers to ever live on this planet. I just can't say enough about my admiration for Costco. More of you should look at Costco. In fact, every time Donald Trump says something and you get discouraged, you should think about Costco." This is very high praise coming from someone of Charlie Munger's prestige, and it shows just how big of a fan he is of this stock. As you probably know, Costco is the second largest retailer in the world with a market cap of more than $160 billion, and it's ranked 14 on the Fortune 500 ranking of the largest US companies in terms of total revenue. They sell pretty much everything from groceries to health and personal care, electronics, clothing, beauty, sports, jewelry, and generally speaking, they sell it all at great prices. However, the main reason why Munger loves the company and its co-founder and CEO, Jim Senegal, is due in large part to his sense that Costco really gives back to their customers. When asked about his love for the company, he said, "It has a frantic desire to serve customers a little better every year. When other companies find ways to save money, they turn it into profit. Senegal passes it on to the customers. It's almost a religious duty. He's sacrificing short-term profit for long-term success." The second stock in the Munger family portfolio is Berkshire Hathaway, which shouldn't really come as a surprise, considering that Munger is vice chairman of the company. Berkshire Hathaway, as you may know, is a conglomerate holding company, meaning it is a company that owns other companies and has stakes in others. Again, Munger has not disclosed the exact percentage that the conglomerate makes up of the Munger family portfolio, but it is likely over 30%. And while Munger's general investing strategy is non-diversified, Berkshire Hathaway is actually doing quite the opposite, as they have a wide array of wholly owned businesses, such as Geico, BNSF Railway, or Berkshire Hathaway Energy. In addition to that, they also hold minor positions in a lot of other companies like Coca-Cola, Wells Fargo, Apple, American Express, and Bank of America, among others. So the Munger family actually bought into many businesses by investing in Berkshire Hathaway. So while many would regard it as pretty risky to have one company make up such a large amount of your portfolio, Berkshire Hathaway is actually very diversified itself and owns many companies across different sectors, some of which are key companies for the economy. Plus, the one controlling the company and its investments is none other than Warren Buffett, of course, who's often called the greatest investor in the world. Munger has also been friends with Buffett for over 60 years, so instead of wondering why he would invest in a company that has the opposite investment strategy to his, the question would really be, why would Charlie Munger not invest in Berkshire Hathaway? Another good portion of the Munger's family fortune is invested in Himalaya Capital, which is an investment fund focused on Chinese stocks. China is the second biggest economy in the world, So this is a pretty smart move, as it exposes the family's fortune to China, of course. Munger's investment in Himalaya Capital is worth around $400 to $500 million. And the reason why Munger chose this company is that he has great respect for the fund's CEO, Li Lu, who he calls the Chinese Warren Buffett. He said about Lu, he's partly a Chinese Warren Buffett. That really helps. Partly he's fishing in China, not in this oversearched, overpopulated, highly competitive American market. So it is really not surprising that Himalaya Capital is the third biggest position on Munger family's portfolio, as Munger obviously feels confident that he can trust the fund, and especially Li Lu, with their money. As mentioned earlier, aside from the Munger family's portfolio, Charlie Munger also manages another investment portfolio through the Daily Journal Corporation, an American publishing and technology company headquartered in Los Angeles, California. The original LA-based newspaper, the Daily Court Journal, began publication in 1888 before Munger purchased the paper in 1977, and through a series of acquisitions and organic growth, built it into a group of newspapers and websites that provide information on the legal industry, real estate, and general business. The company now publishes 10 papers in California and Arizona, with its largest publication being the Los Angeles Daily Journal and the San Francisco Daily Journal. In addition to that, the company also owns Journal Technologies Inc., which is a wholly owned subsidiary that consists of the combined operations of Sustain Technologies Inc., New Dawn Technologies Inc., and ISD Technologies Inc. As mentioned, Munger purchased the Daily Journal in the late 1970s and acts as the corporation's chairman today. As such, he oversees its investments, and by looking at the portfolio, it once again becomes clear that he is no fan of diversification, as the company only owns 4 stocks. The first stock on the portfolio Munger manages for the Daily Journal Corporation is the Bank of America Corporation, which is an American multinational investment bank and financial services holding company. It's the second largest banking institution in the United States after JP Morgan Chase, and the 8th largest bank in the world. Bank of America is one of the big 4 banking institutions of the United States and services approximately 10.73% of all American bank deposits, in direct competition with JP Morgan Chase, Citigroup, and Wells Fargo. Its primary financial services revolve around commercial banking, wealth management, and investment banking. Through the Daily Journal Corporation, Charlie Munger has an investment of $55.4 million in the BAC, which makes up 56.4% of the entire portfolio. While a big chunk of Munger's investment portfolio is made up by the BAC, it's not the only bank-related stock in his portfolio. In fact, 3 of the 4 stocks in his portfolio are in this sector. The second biggest position in this portfolio is Wells Fargo. The company owns 1.6 million shares, accounting for $37.4 million worth, which makes up 38.1% of this portfolio. Wells Fargo is, as most of you will know, the 4th largest bank in the world, and it offers different banking and investment services to individuals, small businesses, and commercial. Commercial banks make money by providing loans to customers and then earning interest on these loans. Like other banks, they also make money through managing people's investments, as well as other means. The third bank-related investment in Munger's portfolio is U.S. Bancorp, an American bank holding company based in Minneapolis, Minnesota, and incorporated in Delaware. It is the parent company of the U.S. Bank National Association and is the 5th largest banking institution in the United States, providing banking, investment, mortgage, trust, and payment services products to individuals, businesses, government entities, and other financial institutions. Munger's investment in U.S. Bancorp is worth $5 million and makes up 5.1% of the portfolio. Like the BAC investment, these are cheap stocks, and one might wonder why Munger has invested so heavily in bank stocks that they make up pretty much the entirety of the investment portfolio that he manages for the Daily Journal Corporation. When asked about this, he reflected on what Buffett and he should have realized back in the day and said, "The banking industry has been a gold mine. I think Warren and I blew it. We should have invested a lot of money in banks. While we did well, we should have been heavier in it. The amount of money made in banking has been awesome, and this despite the fact that people who made the money, how shall I say it, have been moderately skillful." So from what you can see that Munger may not necessarily trust bankers to be more than moderately skillful, he is still convinced that they can easily make a lot of money in the business, and that, combined with the low prices for bank stocks, explains why he owns so much of them. The last stock on Munger's investment portfolio is a company called POSCO. This is a South Korean steel manufacturing company, headquartered in Pohang, South Korea. Though the Daily Journal Corporation own around $400,000 worth of the stock, making up just 0.4% of the portfolio, it's not that important of a position, especially considering that Munger sold off most of his holdings of the company back in 2014. The main takeaway for this analysis of Charlie Munger's investment portfolios is obviously that he owns very few stocks. His family's net worth and that of his company are tied up in just 7 stocks, and while some people might think that this is a pretty risky strategy, Munger himself feels differently and has made it pretty clear how he feels about diversification. He says, "The idea of excessive diversification is madness. The whole secret of investment is to find places where it's safe and wise to non-diversify. It's just that simple. Diversification is for the know-nothing investor. It's not for the professional." So what he's essentially saying is that if you manage to find a good quality business at a fair price, it will make you a lot of money, as Charlie Munger has certainly proven.